So all I'm doing is I'm putting the market into a very specific structure. Now, without giving really anything away, you see these green lines? The green, I'm just very simple. I want you to look at it this way. Green means go, red essentially means stop. And so I have these strategy and I have these price points where it's, I want you to think of, I'll even introduce the red lines as like I want you to think about, I call them VIPs. VIPs, for what I'm going to teach you, that VIP, those red lines, they're going to stand for very important price, okay? So I want you to think of VIPs. VIPs in your kind of like everyday life. If I went to 7-Eleven, I'm not going to see like Joe Biden or Kamala Harris in there buying a Slurpee kind of by herself. Joe Biden buying a Slurpee in like a Slim Jim. I'm not going to see that walking into 7-Eleven. If Joe Biden wanted to be out in the public, what would Joe Biden need to have with him? What would he need? Bodyguard. He would need some type of protection. So basically, and listen, you spend a couple of weeks with me in a boot camp, I'm going to show you things that you're not going to be able to unsee. But basically, I want you to think of, these are your VIPs, right? I want you to think of my, so this is my VIP. I got 2 greens. These are bodyguards. Okay. I'll just put it this way. And so basically the way I teach currency trading is that if something breaks above, if price is in between, price is going to get contained. Like it's like I use these bodyguards and prices are going to the bodyguard's job is to try to keep price in. And so I have this strategy and I have the way of looking at the markets where I play off of these different bodyguards. And I play this game where if prices can get above something, that's a tell that we're going up. If prices can get above, it's a tell that I'm going up. If prices get below, it's a tell that I'm going lower. Now, one of the things, and I spent a little time, more time than I needed to, or to just briefly explain this to you. But one of the reasons why I did spend the time and the reason why I'm showing this to you on this like really big picture chart is because as we enter into 2023, the real question is going to be like, what is going to happen with the stock market and what is going to happen with the dollar? Now, I know that in this audience, I have a lot of stock market people in this audience. I'm a stock market person as well. And one of the things that I feel like I can kind of help you with this, not only with what you're doing, not only I'm going to show you this in currencies, but what I like understanding the currency side of this, I feel can also help you be better in like the investing side, maybe not so much the trading side, but like the investing side of equities, because we're entering into this new shift in central bank policy where we were raising interest rates. And this is the exact opposite really of like when we raise interest rates, this is what the dollar does. The dollar goes up, the stock market goes down. And now we're entering into this like shift where we could potentially be like, we're slowing down the hike. We'll eventually get to the point where we don't necessarily have to raise rates anymore. And the reason why this discussion is important right now is because the shift is already starting to show. And it takes a while, like this is something I could even go further back. Like this, like it takes a while to wind this up. And now we're going to wind this down. One of the reasons why I'm even also sharing this with you is that we are entering into potentially a new trend. Now, I'm not necessarily giving much away here, but like the fact that I can even just say like this to me is flashing big sell signals. Now, just to put something into perspective for you, this is like some of these, I do these what's called a home run setup with people. And just to put something in perspective with these type of trades, and this is not something that I just want to show you because it's not going to take very many of these, you getting just a few of these right here and there for you to really look at your returns over a year, whatever, just say, listen, okay, this was like, that was pretty great. But even if I was just to give you an example with a lot of these, like this is more like someone said, I like longer term stuff, whoever that was earlier. This is a little bit more this is the type of setups that I would do with somebody that is interested in kind of the longer term setups. You're basically trying to get 500 pips here. So watch this. So 500. And let's say I risk anywhere between 50 and 100 to make 500. Now, to put something into perspective, like I never risk more than say like, or this like rule of 2%, don't risk more than 2% per trade. So basically, I just got to get that number to, just to give you a perspective. These type of setups, if I had a $10,000 account, I would need to have this much margin to basically be able to place this trade. This is my potential risk, $200 for a potential return of $2,000. So 200 for 2,000. I don't know about any of you, but I'll take that type of risk to reward on any given day. What do you guys, what anybody in here think? Is it 10 to 1 risk to reward? Would that be something that do something for you?